Time for today's three-stock luncheon. We're looking at a few earnings-related movers. United Airlines and Intuitive Surgical both trading higher after topping estimates, but Generac shedding more than 20% of its value after the company cut its full-year outlook and said it doesn't have enough workers to install those generators that it does sell. Let's trade these names with Delano Sapporo, CEO of New Street Advisors and a CNBC contributor. All right, let's talk about United Airlines first. Do you like it? Would you fly it?
I would fly it. So United Airlines, the big thing from management was they still have strong demand. If you look at the TSA checkpoint travel numbers, we're not up to the 2019 levels, but we're creeping back up. And as been mentioned a lot in the sector, demand is still there, even with increasing price points for tickets. Demand stays high. They had the forecast and their outlook was strong. I would be buying or at least holding United Airlines here, Contessa.
All right, let's move on to Intuitive Surgical. What do you think of that one?
Intuitive is interesting. I think, obviously the earnings was really strong. And I think 3 out of the last 4 quarters, they beat on earnings on the bottom line and on the top line. And I think the big thing that investors want to watch for in this stock is actually the growth in procedures, which is a major metric for them. They're not above 2019 levels, but they are creeping. They've had surgical expectations now have grown for them around 17 to 18%. They just recently forecasted. So I like the stock, strong balance sheet, doing a great job of managing expenses on the hospital side. So I actually like the stock, Tyler.
Okay, and their final name is Generac. What do you think? Should investors power through the news?
They should potentially power down on the news, because the big thing they mentioned was they said that the end customers still had demand, but their channel partners were not seeing that demand that they needed for their channel partners, which obviously are getting their cues from the end customers. So it just was a tough quarter. They had a large customer that obviously as well dropped off. So not much looks good on the news front here. But on the flip side, for investors that are looking for a fairly highly discounted stock that has been trading kind of in a negative light recently, if there's some powering through, the next couple of quarters, there could be opportunity for investors there.
Is the demand not, Contessa and I were talking in the break, is the demand not there? Do the people who want generators already have them, or is the issue that they can't get them installed fast enough?
There was a bit of an issue where they couldn't get it installed fast enough. And as you mentioned, that they don't have enough workers to meet the supply. And that's probably going to be an issue going forward if we have a tighter labor supply in the future. So that would obviously be another case for possibly more downside if they're not meeting the demand that they do have there. But the full year guidance was down across the board. So I think this company's trying to work through some of the issues on the demand side, as well as just, having higher inventory levels.
And for those of you listening on the radio, Generac down almost 25%, the stock really taking it on the chin. All right, Delano Sapporo, thank you so much for joining us. Appreciate your perspective.